All right, hey there, guys. Happy Friday. Oh, coming up on, let's see, 12:45 here. Of course, we're going to look at Bitcoin and Ethereum. If I'm not going too long here, we'll maybe take a peek at the S&P as well, though. Per last week's analysis, not a dramatic change. So I'm going to start here with no Elliott, just market structure. And as many of you know, right, we work closely with the guys at Sonar Labs. So I have their indicator on for market structure. We've got a couple of order blocks. Now I have it set just for focus mode. So rather than have every order block on the screen here, we're just going to focus on what's right in front of us. Oh, if you're interested in Sonar Labs, right, so I always forget to mention this, I'll have their link directly below. But as far as I'm concerned, it's the best market structure or smart money concept, right, as it's often called. Indicator on TradingView, and we get you a little discount. If you use our link, you'll get a 10% discount on that product. So I couldn't recommend it any more highly. There's my little promo for the day. Okay, with that said, so I'm going to start here with no Elliott on it. So we'll just look and say, okay, first question. Always, right? Do I need the Elliott? Do I need it? I'm not so sure I do. I mean, if you've studied Elliott, it would be hard not to see a potential Elliott wave structure here. But do you need it? I don't know that you do. I mean, what here? Well, there's a couple of things to note in the chart, right? It wouldn't matter if you're applying Elliott wave or not. You can see it here. Right? We got a big gap here. I've just drawn the volume profile here. So it's not surprising. Then once we started to come down here, there's nothing there to support it until we get down to this little cluster down here. Now, of course, you can see. It's going to let me do that if I can. Yeah. Bring it down here, right? We got the same problem down here, right? So if we start to break down here, there's very little support. So you can certainly see the potential for the market to start to really accelerate the move down. Now, that is not necessarily what I'm anticipating, but you have to recognize that vulnerability here, right? It was same thing here, right? So you had no support here, so we were able to cut through it on the way back up, but we potentially would have the same problem here, right? Same thing, right? We've got Jesus, I think never fails. But we have the same problem here. There's no support. So if we break here, this is kind of good news, bad news, right? It sets up a trade here with very precise risk reward. So if indeed we're going to never get it on the first one. If we're going to come down here, and this would be the obvious area of support, we can see here as we clustered here, you got some market structure here. Okay, well, if we're coming into this range, if this is going to be the support, we would be at the very least anticipating a test of this supply zone here. If we can get through, then the target is the next swing high, which would be right here at 24 and change. Oh, you probably, if I turned everything on, probably got an order block right there. Here we came up and touched it. Did I get the whole thing? Yeah, probably got it right there. So just missing right there. So this would definitely be here. And you can kind of see like, okay, right. You don't have to be a master Elliottician to see the potential here for, hey, I mean, I might get that textbook Elliott, 101 kind of a pattern here, right? I mean, it's a stereotype because it happens so often, right? Not because it's a rarity. So the potential here is very real, but you wouldn't necessarily need to have an advanced Elliott Wave degree here to be able to ascertain where the support and resistance are. It's really pretty straightforward. I've got the God EMA here, which is they call it the God EMA. The God MA. It's the average of the EMA and the SMA. So it's kind of and again, I use it kind of as a proxy for the Vegas waves to just declutter the chart. And then I've got a 50 period. What is that? That's Lazy Bears. The EMA envelope, I've just got a 50 on that. 50 or 55 would be good to use, right? So, okay, we're on the other side of that. So this nice uptrend here. So this was all just sideways here, obviously, right? So I know not hard to spot what happened here. We consolidate. All right, sideways, then we get a spark. Up we go. Now we're retracing. This is just the natural movement of the market, right? We have an impulse, an impulsive, or you can think of it this way: greed, fear, right? Boredom. So now we've got a pretty good pop here. So the potential for a trader is, okay, well, you waited a long damn time to get this. Long time to get a potential. Well, of course, the big question, right, is this the hard low? A lot of people think not, because that's the FTX low. Is that enough, right, to really tank the market and get all the despair that you would want to see at a low? Well, there's certainly, I think we can all agree that crypto is very much out of fashion right now. Right, well, what's in fashion, right? AI is just everybody's falling all over themselves, and so thus the crypto's benefiting from some of that. Certainly, the crypto that has a role in the AI craze. The graph. Oh, there's a number of them, but the one that I've been watching is the GRT graph. Oh, which one of my senseis has been all over for years, right? So we've got a nice position in there. So that is getting a good lift here with the AI craze. So there's a lot of potential for some of these specific cryptocurrencies to start to move, but the broader space is very much, well, I mean, there's two ways to look at it, right? So it's very much out of fashion right now. It's not what you're seeing, certainly in the financial media. It's, some would tell you we got nothing but trouble ahead with regulations in the U.S. But, it's that distinction between, are we going to call them securities or commodities? I think it's fairly clear now that both Bitcoin and Ethereum are going to be declared as commodities. And we got a whole lot of cryptocurrencies that may end up at crosshairs with the SEC. We'll wait and see what happens there. But if I just had this conversation with one of the guys on my team, that if the U.S. is going to get hardcore about regulating cryptocurrencies as securities, it's not going to go away, right? It's just going to go away from the U.S. And so it's going to be a really interesting case study of all that potential revenue from technology advancing there, and then having it happening outside of the U.S. I think those are going to be real battle lines drawn. I've heard it described in a lot of different ways, but you might think of it as a virus almost, right? It's spread, and it's not going to be contained. So whether it's going to grow in the U.S. or not remains to be seen. We shall see. Okay, so back to the chart at hand here before I'm babbling. Okay, this is okay. We got a little push. We got a retrace. We got a big impulse, right? So it's just classic Elliott Wave kind of pattern here. But again, you wouldn't necessarily need to put a 1, a 2, and a 3 on this to be able to take advantage of a ripping uptrend that is now retracing. Right, I mean, that's just the market's basic dynamics, right? Downtrend, right? So, I mean, here's a good example, right? So downtrend, you think, retrace. Oh, well, we're just going to keep carrying on, right? Okay. Well, wait. Which is very much how a trader might approach that, because you could look here and say, okay, well, here's the downtrend. We came up to the 50. All right, so if again just using basic fib structure here, I'm a little tall there. How would you know, right? So I for 5 years I've been putting up examples of this, and it's a lot of times people are like, well, how do I know which one to take? Well, you can be very mechanical about it. So if this breaks here, well, that's not hard to deduce what's next, right? So if we break here, well, now you're just waiting for the next retrace on the buy side. Right? That's what the algo is going to do. Now we can go, I'm on an 8-hour here. We can go down and down and down and down. We'll go to a 1 minute here, and you're going to have all sorts of that. But out here where it's easier and you're not forced to make, snap decisions or what am I doing? Well, you've got time here to let this develop, and you can take your time in terms of how you want to position for this. Well, with this move here, I mean, I don't think there's much question. God, I miss it every time. Much question about where we might go next. Now, this would be the algo participating here. Now, note here that's not going to line up exactly with the Sonar Labs, because they're using slightly different technique to identify. So here's their swing low, there's their absolute hard low. So now they're right on top of each other. But if we're applying a little corrective, okay, is that the 3 here? Again, we'll get to the Elliott in a second, but if we put this on here, okay, well, if we're coming down here, well, here's the first spot here. Let's get a full measured move on that. Okay, well, if we're coming right in here to the 38, again, do you need the Elliott? Not necessarily. Okay, well, here's obviously the last consolidation point in the market. We can look over here to the volume profile. Okay, if we're coming in here, again, Elliott or no Elliott, wouldn't that be an area of interest? If we say it that way. Area of interest? Yeah, I think so. I mean, I'd be interested there. Just for curiosity here, if I go right looking for a common relationship, if indeed I've got a swing retrace, and then we're going to just use fib projections down here. Well, we're through the 100, so next up 127, 138. Here's the 1618, 175. So each of these are potential locations. So next up here, now what are we looking for? We're just looking for confluence. Okay, so I got the 127, 138. I'm at some structure here where the market consolidated. I consolidated here. I've got a demand zone right here. Like, okay, right. So where would you be wrong? Right? Well, you could use the other side of the demand zone. All right, if you get stopped out, okay. Well, see, now that's actually a good example there. See, for me, I would always much rather take the stop here than try and go, oh, okay, well, I'm going to give it a little more room. Oh, okay, well, I'm going to give it a little more room, right? Because at what point, right? If you're using the algo here as potential support points and entry points, I mean, at what point do you say, well, it was good here. Oh, that looked good. Oh, we had all the reasons here. Now we had, more reasons here because there's the 50. Oh, now I'm in that vacuum here. Oh, well, now I'm at the golden zone. Well, okay, now I'm at a golden zone. Well, now I'm good. Well, why take that drawdown, right? See, I'd rather take the small loser here, right? Because what kills traders, right? Big losers. I'd rather take the small loser here and then reevaluate. Okay, well, do I roll over again here? Can I get that one? Well, if I'm out, small loser, right? If I'm down here, is it ultimately going to be the golden zone? Okay, well, again, if I get stopped out, small losers, rather than set myself up for potentially a big loser, right? Because doing that is how you become a big loser, right? So that's the one thing that you cannot be ever as a trader. Well, you can reset your account, I guess, right? And refund it, however you want to think of it. But small winner, small loser, big winner, but the one thing you can't have, right? Which everybody learns the hard way, big loser. And if you have one, the funny thing about it, right? You've heard me say this many times. If you have a big loser, that's completely 100 entirely self-inflicted. You did it to yourself, right? There's never any reason to do it. Now, okay, there's going to be examples where you were in something and something gapped or some shit happened, right? It's not like we can eliminate all that potential, but we can certainly make a much bigger effort than just say, oh, okay, well, I'm just going to put my stop down here because I want to give it plenty of room because I don't want to get stopped out, right? That's just self-inflicted, right? It's just not a matter of if, just a matter of when you're going to blow your account up. So you don't get so caught up in so much of it is mental. Oh, I got stopped out. Fuck, man, I suck at this. No, actually, if you got stopped out there, you did the exact right thing. You're on your way to being a good trader, being a successful trader. If you put your stop down here because you didn't want to get stopped out, well, now you're just, again, it's just a matter of when. You're gonna learn the lesson one way or another. You can listen to me, you can listen to people who've been trading for a long time, that if you're doing that kind of thing, right, you're gonna learn the lesson. Well, the market's gonna teach it to you, the hard way or the easy way. You can take the advice from people who've been doing this for a long time, or you can say, well, fuck, what do they know, right? I know myself better, so I'm gonna just give it plenty of room. Well, the market is a very, very expensive teacher. And if you are just stubborn that way, and I would be the first to tell you that I was much like that early on in my trading career. I was very stubborn. Like, I didn't want to get stopped out. I knew it was going to go, right? So again, the market will teach you that lesson sooner or later. So as we look here, retracing into an obvious area of potential, right? It's always just potential support. Well, we don't have to sit here with a limit order. You don't have to, right? I wouldn't be terribly afraid of it, but I sure would want to stop on it just for those kind of events that can happen. But if you're taking a trade here, again, we're talking trading capital, not my long-term accumulation capital. But if you're taking a trade here, well, you don't have to sit here with a limit order. Okay, do I get a reaction? Okay, if I get a little reaction, oh, okay, now, right? Okay, great. All right. Okay, if I got a 5 there, am I Well, I mean, do you want to get out there? Well, that certainly would be a possibility because you've just come in, now you've come into the supply. Okay, well, what if it's going to play Elliott ball, what are you expecting, right? Do you want to give back 50, 60% of it? Maybe yes, maybe no. Maybe if you're thinking long term, okay, 1, 2, oh, am I going to get my 3? Maybe I get something like this, right? 4, 5, right? So are you comfortable taking that drawdown? Because you don't know where that's going. So you got to think that through. You want to have a plan. Okay, well, if I can get a 5 here, right, because that's what you'd be looking for. If I can come out of this and I can get something impulsive, right? Shit, it's hard for me to keep the Elliott out of it, right? It's just so ingrained in my brain. If I've got a potential retrace here of this impulsive move and I'm coming down here into support, what am I anticipating? Well, I'm anticipating that I'm going to finish this in some sort of a 5. Right? That's the anticipation, right? It's the rotation, right? That's keeping Elliott as simple as it can be, 5s and 3s. Right, we don't even have it on here yet. Do you really need it? Do you need to put a number on all this? Maybe, maybe not. Maybe it helps you. All right, well, there it is without just kind of looking, oh, what have I got underneath here? Okay, so here's an RSI and that's a percent B, so I know we're outside of 2 standard deviations in the Bollinger Bands. Right, this is an OBV, right? Okay. We were in a long squeeze, right? All of this was a squeeze, which you can see here in this red-orange. So we're in a squeeze, right? So Bollinger is inside of Keltner. So squeeze, squeeze, squeeze. We come out of the squeeze. Well, we're coming down. These are not complicated concepts. I know, right? But human emotion, right? Fear and greed is what complicates it, right? Oh, shit. Uh-oh. Well, I can't buy it. Well, see, here's what the new trader thinks. Oh, my God, I can't buy it. Right? It's going straight down. That's when you... Right, often is the opportunity to be a buyer here. But again, you don't have to sit with a limit order there and just say, well, I'm going to catch the falling knife. Let it show you that, okay, there's buyers that are interested in there. In this range. Well, if it's going to be in this demand zone here, we don't know, right? It could easily just blow through. But if it holds here, okay, we got some buying interest here. Buyers are starting to show up. Okay, well, maybe take a bite there. That's really not that complicated. I don't think that's beyond anyone who's been around the markets for even just a short period of time. Right? Likely you're studying something, right? You're looking at a few things. Well, okay, well, here's an area of consolidation. Do we have a squeeze there? Let's see. We had one. No, we didn't. Right? Oh, well, maybe a little one. Yeah, we did. Okay, so if I do it this way. So here's the squeeze right here. As you can see down here as we go red, black. So there's the squeeze. We come out of the squeeze. We expand higher. Let's get you off of there. I know that's annoying. Okay, so there it is, just as rudimentary as you can make it. Right, we're below the 50. Well, okay, think of it this way: we're between the 50 and the 200. I mean, you could put a 100 on if you needed it. I don't know what you do, right? As we start to come down here, where this would be the next area of interest. All right, maybe you catch the tail end of that. Let's go over to the Elliott count right now. So now you look at it here and you go, okay, is that adding value to it? That's the first question you have to ask if you're going to take the time to do this. Now, for me, I do it reflexively. Like I almost can't not do it. But then I've been doing this for a long time, so my brain just can't resist it. I can't help doing it. It's a struggle for me over here to not put the Elliott on it. But if I come up, do I need it? Not really, but so it takes a little more time. But you're not going to change this chart that often. This is an 8-hour here. Okay, does this help me a little bit? Well, okay, so I've got some traditional Elliott channeling on this. I'm coming into it I'm literally in now the highest probability zone for a potential wave 4 between the 23 and the 38. I've got a demand zone right here. I can see the prior structure. All of that same analysis we just went through in terms of market structures. What's different, right? I got numbers and letters on it. But it gives it some structure, right? So if you want to learn how to do this, that was the entire reason I put the belt system together. Because while there are plenty of places to study Elliott Wave, including Elliott Wave International, I just thought they were just boring. I don't know if you've ever tried to go through any of their videos. They're just boring. That was my thought that, oh my God, it's not that I'm teaching anything different. It's just hopefully a little less boring. And with adding in some market geometry and the algo here that fits in so nicely with Elliott Wave, but that was the whole point of why I created the belt system. So we'll wrap up here shortly here on this. I know I'm kind of rambling here. Okay, is there any question here about what to do? I don't think so, right? I mean, you waited. If you didn't catch this, well, here's the retrace you waited for, right? So don't let this. I'm not. You got to make your own decision, right? But for me, this is. If it's offered in here at 21,200, somewhere in that range, why? What are you waiting for? Why would you not take that trade? Oh, well, because it's going down, man. I wait till they're going up. Oh, well, you're in for a bumpy journey if that's how you're going to approach the market, right? Because if that's how traders were successful, well, what is Warren Buffett, right? We buy when there's blood in the streets, right? When people are fearful, that's when big money steps in, right? When people are think, oh, nothing but easy money, right? When the market just goes up, 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 as we've done for a long time, right? With free money and low interest rates and et cetera. Okay, well, there are going to be periods where it is easy money, right? It has been where there's free money and markets were ripping. Okay, different story. But in day-to-day trading, when you're looking for where are the probable opportunities, it's not when the market's screaming higher or when the market is screaming lower, right? I mean, somebody sold it right there, thinking, oh, look at that. Oh, it's going to keep going, right? And you kind of fill in, you've heard me say this many times. We, as humans, we fill in the blanks, right? We say, oh, I can see where that's going. What'd you get? Maybe $20 here before it turns around, which is why you don't, my advice, right? Take it, leave it. You don't ever want to sell that. Right, because you're so vulnerable, right? You make a rational, even if it goes, right? You're going to be irrational here because you're scared, right? And a scared trader never makes money. You can't be fearful in here. And if you're down here going, oh shit, oh, right? You'll get out, and then it'll do that, right? Why would it do that? Because it goes up, right? So when it's going up, you want to be looking for the opportunity for that trend to continue, which is much like we do with the algo, which was what we were just talking about. If you have a market doing this and then it retraces, well, if it breaks the golden zone, okay, the next trade you want is the next time it comes up, right? Because now you've gone from buy side to sell side. It's the same thing with the Elliott Wave count structure, right? This just is, again, just another guide. It's just another guide. Okay, well, so here, right now, we don't really have, this isn't a textbook example because we're trying to identify a 4, so the 6 or so the 50 and the golden zone are not as applicable here. But where is that very applicable, right? At a 2. Right, so this is the one you want to get into the 3, which is why, if you've heard me say this before, and members all know this, right? If you want to get our purple belt certification, you're trading 3s and Cs. That's it, right? We don't let you trade a 1. Why? What you don't need to. Now, you could trade the 3 of the 1, but we just want you trading 3s and Cs because that's where those are the money balls, right? Those are the money waves. So this is pretty straightforward, right? I mean, this is just black and white, like, okay, well, again, put a stop on it. Don't just be reckless. But if you get offered in this zone, that would be an area to consider, right? Maybe that's a good fit for your trading style, right? Members all, I posted it first thing this morning, right? But every one of them I know has all seen it. So you don't need me to identify that. All right, enough on Bitcoin. Let's go to Ethereum here. Kind of the same idea. It's a little sloppier here. Let me pull out here so we can see it. This, fuck, don't even worry about it, right? At the end of the day, what do we got there, right? This is we get, this is where people love to solve the puzzle, right? They love to go, can I solve the puzzle here? Well, it's just a big 3, right? At the end of the day, that's all it is. Okay, same thing here. Okay, I probably got a 5 here. Okay, another 3. Right? Simplify. Don't complicate. This is complicate for the sake of puzzle solving, right? Which I do. I like it. I'm challenged by the puzzle, but you don't have to do that. You don't have to. What's the basic structure here? Oh, that sure looks like a 3. That sure looks like a 5. That sure looks like a 3. Now, do we have the same thing happening here? Kind of looks that way, right? Wouldn't be surprising that we would have the same thing happening here. So here we go here. Okay, well, I got a potential pivot. I'm 100% failure rate on that. I got a potential pivot here. There's a potential 5. Well, kind of a funky, Elliott's not perfect. Don't expect it to be. Okay, well, there's the correction. Is it a perfect ABC? No. I didn't get a nice ABC, but Okay, I wouldn't want to do this. I wouldn't want to truncate it here. So you got to kind of wedge it in. There's a little bit of a force fit there. Yeah, so what? Off it goes, right? Got a nice clear 5 here. Okay, well, what's happening? Right, another 3. Right into the pocket, right into the structure here. Here I've got Vegas wave. It's not that complicated, right? You got a low volume node over here. Same reason, right? We went down so fast, we went up so fast. Well, okay, if it gets right to the edge of that, ideally you'd like to catch it on the edge, right? Not going, because one of two things happens. If it cuts through, it's going to go to the high volumes. Now you're down here, where you know there's a lot of trading size here. Where you want to try and catch it is right here, right on the edge. Right, we have a low volume node. So if you come down here, same thing, right? You could do the same thing. Oh, is that a 3? Oh, if that's a 3, and I'm coming into the highest probability location, right? That's all we get is probabilities. There's no certainty in trading, right? So let's be clear about that. Well, here's a probable location. If this is going to play Elliott ball and we're going to get that 5, why would you not take that? Oh, I read that Ethereum or whatever, XYZ, fuck, right? Okay, so so what are you waiting for? Oh, well, I wanted to wait and see if it completes that 5. Okay, fine, great. Okay, 1, 2, 1. That's not going to be 3. So what are you anticipating next, right? 2, right? It's just like you were anticipating here that you're going to get a 2, right to the golden zone. Same thing, right? It's just the repetition, right? It's the repeating over and over. So you looking right now, let's be clear. You're going to be wrong way more than you're right. Way more. I promise you, right? There is no way around that. Damn near for any trader, right? You're going to be wrong when you're right, which is you're like, oh, fuck, man. So all of a sudden you got to think about that. First thing you got to deal with there is psychologically. God, can I deal with that? Can I deal with doing my own trading, knowing I'm going to be wrong way more than I'm right? Not everybody can handle that. Right? So what's the solution to that? It's not complicated. Well, you got to make more when you're right than you lose when you're wrong, right? It's that simple. Easier said than done. I know I'm not saying it's easy. I'm absolutely not saying that. But when you get something like this, I mean, even if you have the most rudimentary Elliott knowledge, boy, what are you waiting for? Why would you not take that? Again, okay, well, I wanted to wait and see if I got a 5. Okay, well, you got the 5. Now, if you got the 5, where do you not want to buy it? Right? Where will there'll be a lot of people that will buy it? Right? They'll wait, right? So, okay, it's safe now. Now it's safe. Oh, we're taking out that pivot. Now it's safe. And now I can buy it because in our mind's eye, right, the new trader does this. Oh, it's just going to keep going. Oh, we're going to go all the way up here, right? No retraces. Well, it's not that that's not possible. It's just not probable. So what are you vulnerable to up here, right? You're vulnerable to the liquidity grab here. And so it completes a nice 5. And you're thinking, oh, it's going to keep going, right? Just that's that wishful, like, I bought 12 lottery tickets. I'm pretty sure I'm going to get one of them. That's a lottery ticket, right? Maybe it goes, but that's not good trading, right? Because it's the same thing at the lows. You're like, oh shit. Oh, what if they might. Right? So then you're making irrational decisions because you're so fucking nervous about it. Oh man, I didn't want to. Maybe I shouldn't have. And then so you get out too quickly, right? And then if anything, it'll do that. You get an extension in the 5th because you were just too nervous, right? You want to wait for it to set up for you, right? That's so much of trading is waiting for the right setup, and that's particularly for new traders or younger traders, right? I'm in here. I want the action, man. I trade every day. Well, okay, maybe you're a day trader. But if you're a swing trader where Elliott is infinitely more valuable, right, where you slow the whole thing down, really, as I've often told people, and you've heard me say it on this channel many, many times, 4 hours and above is where Elliott shines. You get down into sure, there are counts down well below that, down to the 1 minute, but it's a monstrous pain in the ass to constantly be relabeling your chart. You stay out here on the longer time frame here. 1, you're going to see it all much more clearly. 2, it's going to be much more accurate. You don't have to you don't have to do this all day every day, right? You can let something set up. So we waited. Fuck, how long have we been waiting? 16 months to get a potential low here. Up. I got a 5. I got a 3. What are you waiting for? I'm not saying I know where that's going, and I'm not saying I know that that's going higher. But if you're a trader and if you're trading this methodology, well, fuck, you wait. Don't why would you not take it? Well, I didn't want to get stopped out, right? I didn't like the risk. Okay, well, okay, so here, let's risk reward. What's the risk reward? I'm trying to get a 5 up here, right? My target is the prior pivot high. Okay. Well, there's 8 to 1. Right? You got to make more when you're right than you lose when you're wrong, right? Pretty simple. So if you got stopped out here, okay, next trade. If you're a trader, your next thought is, okay, where's the next opportunity? Not, oh, fuck, man, I got stopped out. I suck at this. Damn it, I don't know. Maybe I shouldn't be doing this. I don't know. Maybe I just give it to a money manager, right? If you want to be a trader, you got to deal with all those issues, those psychological issues. I'm going to be wrong more than I'm right. That kills more traders than anything, right? They can't deal with it. It's hard to deal with it. It's depressing, right? You have a string of losers and like, oh, well, this doesn't work, right? So then you start hopping to the next technique, and then 6 months later you come back and say, "Oh my God, look at that perfect Elliott wave," because you were during all of this shit. You're like, "Oh, that stuff is bullshit. That's bullshit. I don't fuck that. I'm just drawing lines." And then right? It's because it's not always there, right? I mean, can we always label it? Yeah, we can always label it. We can always squeeze something in. But when Elliott is making you money, is when it's almost it's effortless. It's like, oh, 1, 2, 3, 4, 5. Here comes the ABC. Oh my God, look how good this is. Oh, right. That's when you make money for all the times that you're like, what the fuck is this? Now, okay, right. So if you like the puzzle, right, maybe you can trade that. But how many times are you going to get stopped out there? More than a few. More than a few. Oh, it's a triangle. Oh wait, no, it's a double zigzag. Oh wait, no, it's a WXYXZ. It's a flat. I mean, again, you're going to be wrong so many times in here. Then when it finally really shines, you're so, you're mentally so twisted, you can't take the trade. I've been doing this for so long, not only teaching as a broker, right? As a broker, I watched, oh my God, hundreds and hundreds of people trade, right? So I see who does well, who doesn't, right? That's why I did it. That's why I went into the business. I wanted to learn how to trade. How do you learn how to trade? Watch 100 and 200 people trade. See who's good, who's not good. What is their temperament like? How do they approach the market? Again, I mean, you can watch my videos here and listen to what I'm saying and go, well, fuck, I don't know, that guy's wrong a lot. Yeah, I am wrong a lot. The goal is not to be right? The goal is to be profitable. All right, how am I doing? 32. I'm probably going to wrap it there, right? I will say this for any of you that are still here. We're going to start making some changes here. So we're about to launch a new website. We're going to change up our pricing structure. We're going to do a lot more live streaming. We're going to simplify the whole program, probably make the belt system available to many more people here. So you can see a lot of changes from us over the next, probably 60 days. So for those members and YouTube subs, you can expect to see a lot more changes. I had an interesting conversation with a company that reached out to me, and they said, listen, man, you not live streaming and not putting your face on the screen, which, I never really thought it made a difference. But he said 10 to 1 engagement. You'll have a much better relationship with your subscribers and your members. They got to see you. They got to know you. They got to say, all right, okay. So I just got a whole new setup here. So you'll see me squawking at you as we do that. And we're going to do a lot more live streaming during the week so we can just work with people in real time. All right. So like I said, new website, new pricing structure, new access to the belt system, right? Because that content is, I think there's still value there. All right, guys. Have a good weekend. We'll talk to you next week.